Time for top picks now from Rick Stuchberry. He is our guest on Market Call. Top pick number one, Brookfield Renewable Partners, ticker symbol BEP.U on the TSX. Rick?
Yeah, Paul, this is one of these combinations of reasonable yields, about 3.5% now, and good growth prospects, we think, going forward. It's well led. It's part of the Brookfield group of companies. Mark Carney's chairman. They've got good leadership. This is an area that we think is going to expand over the rest of this decade and do well. People are looking for, especially the millennials, they want the green power, they want this concept, and they're willing to pay for it. So I think it's a good combination. You've got the financial integrity of the Brookfield Group. You've got good leadership in it, and it's a reasonable yield. And this stock has a tendency to go into the low 50s, and that gives you your more than 10% rate of return, which is what we look for on these income / growth companies, Paul.
Okay, number two, Royal Bank of Canada, one of the most high-profile stocks on the TSX. RY on the TSX. What are your thoughts here, Rick?
Yeah, well, it's just that the banks have pulled back, Paul, and what we've done is we had sold some of the Canadian banks early in the year. We've replaced them. Royal's the biggest. It's diversified. It's got the capital markets, and importantly, more and more importantly, it's got the asset management groups, which we think are the steady Eddie part of the banking. Cash flow statements going forward. This is going to be where they're going to generate a lot of income. It's well managed, and it's the biggest. So it's kind of an easy pick because, at this price, where it can go, it could easily go back to its highs without any difficulty. And that's a very good rate of return.
There are increasing calls for a recession in Canada. In fact, it's economists at RBC who are making that call today. Is this the right time to buy a Canadian bank stock if the domestic economy is headed to a 2023 recession? Or phrased another way, are the share prices already factoring in a Canadian recession?
I think we've discounted this market, Paul, has discounted a lot of bad news. We're down. When you look at the other slowdowns in bull markets, we still think this is a bull market, Paul. There's debate there, but we still think it is. Most of the corrections, the early 90 correction and I mentioned the early 1920s, they were 10% corrections inside the bull market. They went on longer. They went on for a year. But this one's down 6 months, and we're down, 20, 30%, 30 on the NASDAQ, 20 on the S&P. This is an opportunity. There's a lot of bad news discounted in this market right now. So we think it's an opportunity to start to add. You don't have to buy everything at once, but you could certainly take a position, start to take your positions here, and put the money in over the next few months as the market starts to build a bottom here and work its way through.
Okay, and finally, we'll go to the chip sector for one of the big players in the graphics chips world, NVIDIA, ticker symbol NVDA on the NASDAQ. This one had an enormous run and also has lost some significant altitude.
Yes, and we wanted to put a new economy stock in, Paul, just because we think growth is important. When you get inflation, you need growth to offset inflation. Now, this inflation may not last for years and years. You don't know that, but you need to have growth in the portfolio. And this is a stock that is sort of essential in AI. As you mentioned, it's in GPUs. So it's a great, we think it's a great opportunity to get some leverage in the market after a stock's been beaten up pretty badly. And this whole sector, the NASDAQ has got creamed, as you know. It's down what, 30% off its highs. And there's some very good companies here that are still growing at over 20, 30% per annum, and that are essential going forward. And this is one of those companies that you have to have if, in the new economy as things open up.